going, everybody?
Okay. Good morning. My name is George Ristau, Weichert Realtors All Pro. It's Tuesday morning, September 17th, and we're here for another edition of All Pro TV. Today's guest is Charles Ramos, and he's the owner and operator of the American Family Office, located at 7134 Grand Avenue in Chicago, just on the edge of Elmwood Park. His office is located in the Galewood, Montclair neighborhood in Chicago. And Charles, and we're going to call him Charlie today because we've known Charlie for a long time, has been in the real estate environment on the insurance side for over 19 years. He's a general full-service agent with his company, and he can give you a little bit of an idea as to a few of the things. We're going to zero in today primarily on the real estate side of the equation for the insurance products that he has, hopefully being able to get good information out to our clientele that have good questions about their insurance needs. So Charlie, welcome to today's event, and we're happy to have you here, and maybe you could give us a little bit more background just about yourself and how you got in the insurance business with American Family.
Absolutely. First of all, thank you very much, George. I appreciate it.
Okay.
Here to talk about what I like to do, and that's to share information with other people. Again, I've been in the business for just about 20 years, 19 years with the real estate and the insurance side. I did mortgage banking at the same time, but I found my forte inside the insurance business only because I had a little more in depth. I get to see the people over and over again. When we build relationships, I just want to build those relationships and just let them go. Some of these people right now, their children are 20-something years old, and they're coming back to me now. So I'm getting back that, as we say, residual business, and we call it generational business in the insurance world, where if I do write somebody that comes from a parent's policy, they get a generational discount on that as well.
Oh, good.
Yeah,
good,
so
good.
It's a couple of different things here that I live in Elmwood Park, and I'm married. I have 5 kids, I have 4 girls and 1 boy, and I'm a believer, and I love what I do. I love sharing the information like I mentioned earlier, and that's what we're going to talk about today. We're going to talk about, I guess, George, some questions that you have for me, and I'm trying to do the best that I can in answering those, and streamline along and help the clients out to let them know the differences on insurances and the companies if we can, and also just the different types of coverages that are on the policies.
Okay, good. And then just geographically, you've been over at the Elmwood Park location, but you're originally from Chicago.
Yes,
growing up in Chicago, so born and bred in the Chicagoland area, and you've been now working on the insurance side with American Family for, as we said before, about 19 years.
19 years now.
Right, good. And locationally, you've worked before on the north side of the city before coming over to back towards home, towards the Grand and Harlem area, correct?
Yes.
Okay.
I was up in Smith Park, was the Ukrainian village, also West Town, and I enjoyed my time over there. But it was time for me, as you say, to come back home.
And that's good. And we're glad you're back here, Charlie, to be able to share not only with our sphere of influence here, members of our office, our clientele, but also we're on the Grand Avenue block here, and we do have a lot of people that actually stop by and see you, usually in the front window, and stop in to say hello, and oftentimes become your customers.
Yes, that's right. Yeah.
Good.
I've had quite a few walk by. Lead-wise, they see me inside, they call me, they walk inside. My exposure here was greater than where I was, and I'm just amazed. And the community around here is receptive to me, so I really appreciate that.
Okay, well, that's good. So we're off to a good start. So I think what we should do today in focusing on our discussion is to put it in the setting of a buyer is going to come to you, and this would be, let's say, a first-time buyer. And now they've just signed a contract, and they've just put up an earnest money deposit, and now they're moving forward with their inspection, part of the process, and eventually going towards their attorney approval, and then eventually looking at a closing, say 45 days down the road for the closing. And if they're having a first contact with you, then I think it's important, and I know you're very personalized on your interviews, with them, and typically they're either in the office or you're talking to them in detail over the phone about the things that they should be looking at on trying to make a good decision on homeowners insurance, which would provide them with coverage on their new home. So let's talk about some of the things that you would speak with them in a discussion when you get started on the homeowners with them on a first meeting.
Absolutely.
What would be the first thing that you talk about usually?
The first thing I do is congratulate them.
Okay, good.
It's a very exciting time. And they have all these things running through their minds. They're thinking about the insurance, thinking about the mortgage, thinking about the move-out date. They're thinking about their children going to different schools, whatever it may be. They're all over the plane. My job is to get all the information that I can from the purchase that they're going to do. What I try to do is just relax them. Again, I congratulate them. I tell them who you're working with. I ask them to give me their mortgagee information or the mortgage person contact information. This way I can get and correlate with them any information that I need. Most of the time I like to have appraisals as well because they help me get the square footage of the building. Now in the insurance industry, what we do is we'll take the age of the house. I'll ask what year was it made or built, whether it's made out of wood or frame. I'll ask about the plumbing, the electric, the heating, and the roof. Those are the 4 major components of the building. So if any updates were done, it's better for the insured or the client to know these things. What happens is if we have a property that was built in 1895 and I don't believe that any of these things were not done, but if they weren't done, they would be declined insurance. There's a lot of insurance companies that wouldn't write them.
Right, because of the age of the property and also the lack of upgrades.
Correct.
Over the years.
Correct.
So kind of going on a little checklist so that they would be thinking about these things. And I would think it would be important for them to be in communication in the early stages of this process because they're going to, again, be going through, in a typical contract, the inspection is within the first 5 business days of the transaction. So, and oftentimes they're there with the inspector. Mm-hmm. So they can be kind of checking out the bullet points that you might toss at them in that. So would you say that it would be important to have an early conversation if possible? Absolutely.
Again, diligence. Diligence on their part and diligence on the people that are representing them. And I should say the accountability. I'm just going to give an example. I am the underwriter, the first underwriter there is. So when they contact me and I gather all this information on the house, bedrooms, walls, type of the outside, the plumbing, the heating, the roofing, the electric, all these upgrades that they had, whether they have a fence, a driveway, a garage, all these parameters I take and I do a replacement cost on it. Now I take the replacement cost, what our input comes out with, it's the software, it's the insurance to value software. I use that as a starting point to insure the house. So if they're purchasing a house for $200,000 and the replacement cost is $250,000, I would highly suggest to them to insure for the $250,000. In the event that something were to happen, they'll be fully covered.
Okay. And if they opted not to go for full coverage, if they only went for 80% coverage, then potentially what happens?
If there was a major loss, they would partake in a co-insurance, and not only that, they wouldn't get their money.
Okay.
They'll be short.
And oftentimes with today's environment for first-time buyers, many times they're purchasing a property with a lower down payment and a large mortgage. So they want to make sure that that mortgage amount, which they've signed on for personal liability, is going to be covered.
Yes,
right?
Yes,
right.
Absolutely.
Okay.
And again, don't let the numbers scare you. What happens usually is if I do a $250,000 replacement cost house, and I'm just throwing a number out there, let's say it's $1,000. Now, if you say, no, I just want $200,000, well, it's going to cost you $950.
Okay.
So smart money says insure it for the full value for those $50 that you're going to stretch over a 12-month period of time.
Sure, sure. Yeah, that makes sense, and that's well explained. So again, full coverage is typically the best way to go, unless there was really highly unusual circumstances then.
Very highly
Correct?
Unlikely.
Okay, so most of the time we're going for, again, for the full replacement. When we talked just a couple of minutes ago, you mentioned some key items to kind of keep an eye on in a typical transaction. So let's start at the top. We always like to start at the top,
okay,
and then we'll kind of work our way down. The roof, I believe, is where you had an initial mention. So what are some things that they should be looking at on the roof question?
On the roof question, you want to ask the seller of the home or whatever property you're purchasing or looking at is how old is the roof?
Okay.
Okay. Usually there's an expectancy of a lifespan on every single roof there is. If you come across a composite green roof, guess what? Those haven't been made in 20 plus years. So that tells you that that roof is not only outdated, it's not available. So
Okay.
when you write an insurance policy with the company, ask that company if they're going to guarantee replacement costs on that roof. Most likely, if it's not in writing, they will not. They will do an actual cash value. And when they do a depreciation on an actual cash value policy, you could start off at, let's say, $15,000 replacement cost, end up only getting $1,995 minus your deductible already, okay, for the payout on that roof.
Because they're going to price it based on the remaining useful life of the roof,
Yes.
is that correct?
Yes.
Okay, and so what are your normal ranges for roofs? Somewhere in the neighborhood of 15 years to 25 years if you start with new roofs?
If you start with new roofs, we give you replacement costs, and there's an endorsement that's on the policy. We guarantee it 100%, and usually lasts for like 0 to 5 years.
0 to 5, okay.
Yes. And then from the 6th year on, and then it's a ladder that slowly progresses downward, then that percentages change.
Okay.
All the way down to, let's say, 30% and 20%, and then from there, that's the maximum that they'll give you. Then they'll change the policy to an ACV policy.
Okay, now
Actual cash value.
Actual cash value. Okay, so let's say that someone comes in and they're buying a home, and they find out that the roof is older, but it's functional. It's not, none of the shingles are curling, and it probably has, let's say, 5 years left on the roof itself, which is not unusual. Many times we sell homes anywhere within the range of brand new up to around 20 to 25 years, because roofs can last that time, depending on the quality of the roof and the original installation. But if it's something near the end of the useful life for the roof, how does that get approached from the insurance side?
From the insurance side, again, I'm the first underwriter, so when I go out there and I look at the roof, I've looked at many roofs over my 19 years. If I see missing shingles, any curling like you mentioned, frayed or bubbling, then I know I can't write that house. I will let them know that the house doesn't qualify with us, that you could perhaps try another company, but I highly suggest that they speak to someone about finding out if that roof is going to last another, as you say, 5 years.
Okay, so that's real important for them to know that up front, so that they're in a position, because they're not going to be able to close their transaction unless they have a homeowner's policy.
Yes.
So you can catch it very early in the game.
Yes.
Then on the roof issue. How about other calamities that could affect a roof? I know in recent years we've had a lot of hail damage issues, just with the fierce storms coming through the Midwest. What's happened with hail damage, and how does that play out?
Hail damage, wind damage are basically some of the biggest claims that we had across Chicagoland area, Midwest area. There was a couple incidents in past June, I believe in early May of this year. I seen some hail. I've heard the hail falling when I was inside some shops like Costco where they have a tin roof.
Yes.
And it feels like somebody's battering, just beating something. And my first thing in my mind is, oh, I'm going to be getting a lot of calls.
Right.
It's like, oh, this is going to be bad. Well, the hail size that fell could be the size of my thumbnail. Okay, so let's say a dime, compared to the relation to what they received in the suburbs, maybe 25 miles away, and it's golf ball size.
Okay.
So I've seen a lot of golf ball size hail fall 20 miles away, 25 miles away from the city of Chicago, where in the city of Chicago it hasn't. But one way to tell that if you have hail damage, if you have aluminum soffit fascia, if you have any chimney stacks, you can look at those to see if there's any indentations around them. Generally, if you'll see a pockmark, and it'll be all over it. So if you see something like that, just like the same way that it dings a car, it's going to ding those items on top of the roof.
Okay. All right. So that's good, kind of good rule of thumb. And then ultimately, if they had damage, then they'd be contacting you, and you'd be sending somebody out to take a look.
Correct.
Is that right?
What I usually do, and I don't like to put a claim up front, because once you put a claim in, your agent will put it inside the system, and if they pay out, of course, that's a blessing for you, but if they don't pay out, then you have a claim without a payout that's counting against your record. So what I suggest is, hey, you know what? I have someone that is a dream repair program with American Family that could come out there, and they'll give you a free estimate just to see if you have any damage. And usually they'll go out there, they'll assess the damages, they'll come back and they'll tell the insured, hey, guess what? You have little, if any, damage at all. If I were you, I wouldn't do anything about it. This way, it saves you the process of going through the claim and having a zero payout. Now, I've seen claims where I did refer over to someone that they went out there, they did an inspection, and guess what? We paid out $15,000, $20,000 on claims.
Okay.
So if it's warranted, you're going to get it. If it's not there, you won't receive it.
Right. It's just kind of a side issue on the state of Illinois disclosures. There are typically about 20 items that sellers need to fill out, and that would identify anything that they deem to be a deficiency in the home that's in the disclosure itself. Mm-hmm. Now, hail is not in there, and insurance claims are not in there. However, under attorney approval, typically we oftentimes see the buyer's attorney insert a clause into the attorney approval process that says, please identify any insurance claims that you've had over the last 5 years or possibly 10 years, depending on the scenarios that are there. And maybe you could talk to how everyone knows that these things are out there. A national database is potentially available or is available right now for across the industry. Is that how it normally works?
Yes, there's a clue. It's called a clue report, claims underwriting expert program that they use. So every claim that we put in, whether it's my company or the various companies that are out there, they put all that information into this database.
Okay.
This database, just like the Medical Information Bureau, every prescription drug that you took, every doctor visit that you went to see, visit or whatever, is all gathered inside there. So they know everything about us.
Right.
They know everything about that claim. I just like to say one thing. If your company is giving that information to your potential buyers, I think that's valuable. I think giving them, say, hey, you know what? Call the insurance company on that house or have the owners get you a 5-year loss run on that house. Because again, you're the first contact you have with them. If it happens to show that they had a couple flood, sewer backup problems inside the house, it will show up on that 5-year loss run. Okay, you said it. There's a disclosure that they sign, but just imagine that extra step that you took for service, giving that to them, that information, that they say, you know what, you did us good, you did us right, we're going to stay with you. Can we look for another property somewhere?
Okay, good thought. On roofs, anything else that you can think of that's real important to be thinking about on the roof side?
Be very leery of somebody knocking on the door telling you, hey, we'll take care of it for you. There's companies out there, I call them ambulance chasers, if you guys remember that, where an accident was. They're there, ready to scoop you up and take you to the hospital and take care of your claim for you. Well, when somebody else takes care of your claim for you, you're giving them authority. So when you sign on any paper that they present to you, you're basically saying, I have a claim, but in the event that I don't have any claim and I decide to do my roof later on, you're going to pay me 20%.
Okay.
Very, very leery of signing these documents. Read them.
Right.
Read them thoroughly.
Read them, and I would always consult with your attorney prior to probably signing anything of significance on it. And we've kind of covered the top part, right? You did just reference, so let's flip around and now look at the bottom part of the house.
Okay.
And that could be foundation issues or more likely potential water issues in basements. Now, under our disclosures in a typical real estate transaction, there is a question which is right at the top, and the question is the seller aware of any recurring flooding issues or any issues, water issues in the basement or crawl space? And they have to be honestly answer that, and then that information goes to the buyer. So there are some misconceptions out there about what's actually covered, and there's actually been some changes in the industry, I believe, over the last 10 or 15 years about certain types of coverage. So could you share, especially with all the natural catastrophic phenomena going out there throughout all parts of the country, tornadoes, monsoons, floods, and everything else that you can think of. We have been somewhat buffered from that in the Midwest, but of course, we've got our issues too. As we talk today, the Des Plaines River is near flood stage from rains that happened over the weekend. So what's the scenarios that an individual should know about what's covered in their normal policy, and how do they protect themselves?
Very good question, George. In a homeowner's policy, backup water, which comes from the sewer from the outside and backs up inside the house, is not covered unless you have an endorsement on your policy. Okay, so if you have a sump pump inside there, ejector pump, that's a separate endorsement as well that you would need to add to your homeowner's policy in order to cover in the event that these things happen. Now, by having those two endorsements is not enough. If you do have a sewer backup system and ejector pump system, you need a battery operated backup system to that. So a lot of the companies these days are making you make sure that you have that backup equipment set up on there in the event that the power failure in the neighborhood or in the city or wherever you're at, the village, happens and your system continues to go.
Okay.
So
right.
that's a big one.
So you have a base policy, and then you'll ask that homeowner, would you like to add on additional endorsements to cover you for sewer backup and then for the other items too, the sump pump and the ejector pump, right?
Correct.
All right,
Absolutely.
so let's use that same example of a homeowner's policy that's about $1,000 for a base coverage. What's the additional cost roughly for the endorsements that would be coming in under that?
Well, I mean, it depends on different zip codes.
Okay.
So it's very hard to really say, but I'm going to say at least $300.
Okay.
Okay, just to say on the safe side, the soft side. Another thing that I do want to point out is and that as well, that if water does breach the streets and it come towards the house and you have a window well, or if you have windows and they're street level and that water keeps on raising, like you're saying, recently there's a community around here that had 15 feet of water. That's their flood stage. Okay. We have 15 feet of water over here in Elma Park. We're going to be above the first floor.
Right.
You know? So if that water intrudes towards the house that way, that is not covered under any homeowner's policy whatsoever.
Okay.
When that happens, that is a natural occurring 100-year cycle if you be, but it is a flood insurance problem and you need flood insurance. And the only one who designates that is through FEMA. I can get a policy through FEMA for flood insurance for the homeowner. If that doesn't happen quite frequently in an area, because depending on the zones that they're at, you can pick up a policy for like $1.25 a day.
Okay.
Okay. But if you live in a flood zone,
so that's $400 a year,
yes,
approximately.
Approximately. Yeah,
Okay.
350 to 400.
Okay.
But if you live in a flood zone,
okay,
pricing on that could be extensive.
All right. So, and there are different zones, and you can look at a flood map, and that would be part of the analysis.
Correct.
Tying it back to real estate, one of the questions on the disclosure is the property located within a flood zone or floodplain? And the seller is supposed to check yes. If they did not and they missed it, then it can be problematic down the road, because when you go to try to get your mortgage on the property, then invariably it's going to pop up that it's in a flood zone. And ultimately, those premiums, if you are in a flood zone area, can be relatively expensive on a monthly basis. Yes. Have you written any recent policies for properties in a flood zone?
Recently, no.
Okay.
I had a lot of inquiries. I do have clients that have them.
Okay.
And they stick with them.
Okay.
Because they've had water come up to their street levels and, you know, creeping slowly towards their doors. Okay. But they're in the flood zone.
They are in the flood zone.
Yes.
Yeah, yeah. I've seen some, and we've closed some transactions, and I always recommend that each individual check with their insurance agent for costs, because you can shop, you know, on those items also. But it's not unusual that if something is if a property's in a flood zone, that the premiums could be in the neighborhood of $150 to $200 a month. And that is usually tied into the mortgage amount also. So a bigger mortgage, that would mean a bigger premium for the insurance company to both receive, and then they have to pay out, you know, on these. And I don't believe they're ahead of the game right now on flood insurance. That's the insurance companies. Right now, it seems like homeowners insurance policies are going up because of lots of environmental issues that are going on, and not always neighborhood related, because we're dealing with a national industry here, correct?
Right, correct. Right. You know, when you write with the mutual company, you're becoming a member. So you're becoming a member with, if they have 1 million policyholders, with those other 1 million policyholders. So if something were to happen, everybody gets an equal distribution of the premiums that are going to raise.
Okay.
So if there's going to be an increase, everybody partakes in it.
In that.
Right.
So now, specifically American Family, where are the corporate offices for American Family?
We are in Madison, Wisconsin.
Madison, Wisconsin, so the home of Wisconsin football
Yes,
up there.
Wisconsin
right?
football.
Wisconsin football, and
Cheese curds.
And how long has that company been in existence? A long time.
They've been in business since over 75 years now.
75 years.
Yes.
Okay, and then statewide, are they in every state right now, or are they
We
in
are
a few?
in 19 states. We are a Fortune 300 company. We
Okay.
pay our claims.
Okay, which is really important to know. But again, is it mostly Midwest, or are you located in some areas like California, Florida, those types of states?
Yep. We're located in Washington. We're located in Georgia, where they had over a half-inch of snow one time and it practically just shut the whole town down.
Sure.
It's amazing. Our claims calls were high, but our payouts were low because there was no damage. It's just that they weren't used to
Snow.
snow.
Right.
Yeah,
Right.
but we Washington, the state of Washington, we do right there.
Okay.
The first year we're there, it's a very wet climate.
Right.
You know, we had a lot of claims out of there, but we took care of those people. We took care of our insureds at that time. We also write in the Midwest and Michigan. We do not write, but we write in Minnesota, Wisconsin. We write in Arizona. We write in Illinois, Indiana, and we're looking at other states across the East Coast side.
Okay.
But we will not put ourselves in a situation where it will overrun the premiums for us to pay out.
Sure.
So we always have to have a safety net. So they're smart.
Right. So they're prudent and they're conservative. It sounds
Very
like
conservative.
right, which is a good thing. It's always good to have a company that's going to be paying out your claim to be conservative, because you're investing those premium dollars in the policy, and you want to make sure if catastrophe strikes that you have that protection.
You have a good
that's
company
there.
to back you up. Absolutely.
Good. So we talked about the roof, we've talked about the basement, and what are the other two things that you had mentioned which are important as part of the process?
You know, regarding the basement again,
Yep.
I always want to be the insureds know that if there's a crack in the foundation and seepage comes in, you might think, remember the little boy that put his finger inside the dike to hold it back, but if you don't do anything about that hole or that crack, that water keeps intruding and it keeps expanding. What's going to happen one day, you're going to have 1 inch to 2 inches for water that's going to find its level, and you might be stepping in 4 inches of water. That is not covered.
Okay.
Okay, that is not covered on insurance policy because that's considered part of the maintenance. Also, the roof. If you have an older roof, please look into getting it replaced, because if the maintenance issue does become a factor, because we're not going to, insurance is to protect the house in the event that a calamity came across, a fire, a severe windstorm, rips off the roof. We'll cover that. Now, if you haven't replaced your roof in over 30 years and it's falling apart, and I've seen some, and you called us up and you say, hey, I need a new roof, it's going to be denied, and then you're going to be mad at us because no one ever told you it's not a maintenance policy. You know, it's a protection policy.
Sure. Sure.
Yeah.
Okay, good, good.
I just wanted to mention those two
No,
things.
that's good. So good clarifications on those 2 points. And then you also talked for the other 2 items, was it the furnace is a question, furnace and air conditioning?
Yes. On the furnace side, myself, I changed my furnace in my house. I bought my house in 1998.
Okay.
Okay.
So a 20-year anniversary here just last year.
And I switched out my furnace and my AC at the same time, making a combination. I did save some money, a lot of money, but I changed it in 2013.
Okay.
So the expectancy, not only the expectancy on the unit that I had, but it was so old that I was wasting more money. There are so much energy saving products out there these days that I see the return now on the investment that I made by switching over these two. Now, what happens is when you switch over on the electric, it needs to be 100 amp circuit breakers.
Okay, so a minimum of 100 amp. And
Minimum
so
of 100 amp.
Oftentimes we see 60 amp services that are still out there from
Yes.
some original homes that were built in the 50s or the 60s. So if you came across that scenario and it only has a 60 amp service, then what do you have to tell that individual that's trying to get a policy?
If it was the fuses, we couldn't write them.
You could not write
We could not
fuses.
write them.
Okay.
They would have to update that system, but what I like these days now, that code is making people replace, or potential homeowners or buyers, or the homeowner themselves, I should say, replace the circuits, the electrical system inside the house. So if they do have fuses, they have to upgrade it from 60 amps to 100 amps because these days everybody's plugging something in the walls.
Right.
So those wires that are inside there need to be replaced as well. Okay. So if you have an upgraded 100 amp circuit breaker system inside your house, instead of the wires overloading and getting hot, that circuit breaker will trip and it will turn off. Now, the other warning on that side is that if you have a service breaker that's constantly tripping, call a qualified technician inside your house and investigate it. You could be warding off a potential fire.
Okay, and that's always, that's always really good to know, as you're out there. And one of the key things that you just mentioned is municipalities sometimes enforce these items, but oftentimes, because we have such a diverse real estate base here, and Chicagoland is so diverse in population, we have the city of Chicago, which is primarily, the largest entity that's there. Mm-hmm. And then within the remaining suburbs that are around, there's over 200 individual municipalities that are out there surrounding the city. And therefore, benefits and non-benefits is that everyone has a different approach and different sets of rules. Close to home here to our office, Elmwood Park, has a moderately strict inspection process, and they'll go in and they'll evaluate, and if you are not at the proper level, they'll require an upgrade. And sometimes the seller will do that, and sometimes they can pass it on to the buyer. Mm-hmm. To be completed within a short time after the closing. But bottom line on it is that they are still getting some level of performance and some level of putting themselves in a position that they make their new population, their new people that are moving in, as safe as possible.
Yes.
On the flip side, we have a large city in Chicago, and they do not have an individual municipal inspection. So in that scenario, you'd have to rely on your private inspector to make a recommendation, but a recommendation doesn't necessarily mean it's going to get done. So you would want to, again, keep that in mind along the way. And how many denials do you wind up getting because they're 60 amp services?
You know what? Believe it or not, very few.
Very few. Okay.
Very few. If I've done a dozen in the last 10, 15 years, is a lot.
Okay, now let's say that somebody comes in and they still want to do the policy, but they did not upgrade the circuit box yet. Mm-hmm. So is that something that could be, the policy could be conditioned on that being completed within a certain period of time?
Great question. If somebody is purchasing a house and they have a 60 amp circuit breaker inside there and they're thinking about updating the system, what I would need is a contract, a signed contract, that they're going to do the work within the next, let's say, 60 days.
Okay. And
then I could take that back to the underwriters. Generally, when they see something like this, they know that it's going to get done, so we'll write the policy.
Okay. Okay.
So, a matter of fact, I just had one on a roof, on a garage. A garage is an extension of your homeowner's policy. So usually the coverage from your property gets 10% towards your garage. So this specific garage, it was just beyond its useful life.
Okay.
We gave them the options to either tear it down or replace it. And what happens is generally is that we'll take off the liability side of it. So in the event that somebody does get hurt by endorsement, that we will not cover it because the garage was already this potential. Now, we also made them take down, well, the option was theirs for them to take it down, but they removed the garage and was able to continue the policy with us. And they also gave me another document from one of the garage builders in the area that they were going to build a new garage. And I took that contract and I gave it to them, and they let the policy continue.
Okay, good. So they have some level of flexibility, and it's always good to have an agent such as yourself go to bat for that individual that's going to be your future customer then.
Absolutely.
Correct? Okay, let's talk about the heating and air conditioning. You mentioned that very briefly. Anything to watch out for on that?
Nothing to watch out on. I mean, basically, if you get these older units inside the house that you're purchasing, again, that's something that you and your realtor or yourself and make the decision to say, I have to upgrade the system at one time. Anything, again, that's over 20 years old, you know, it's beyond its useful life. Another thing that happens is that if you do upgrade those items, it looks better for your insurance portfolio as getting the insurance. So when you do replace the AC, the air conditioning unit, and the heating, well, if you did it in 2013, and not only that, there's a built-in endorsement into the policy. It's not endorsement, it's something that's added to the policy that in the event that's inline service or service to the heating or the air conditioning breaks down for whatever reason, that it'll be a covered event.
Oh, wow. Okay.
But it's not because it's 20 years old. If you replace something in 2013 like myself, and then all of a sudden my unit went down or frayed for whatever reason, American Family would cover it.
Okay.
They would cover the cost of it. So I found that to be a great policy. I know there's home warranties out there that have something similar to it. We have an endorsement. It's not an endorsement, but it's added to the policy, and it's like $25, $30 more.
Okay. And that's on an annual basis, but
That's
then
on an annual basis.
Then you're covered if something
Yes.
collapses along the way.
Yes.
Okay, so that's good to know. So I think we covered most of the basics, the top, the bottom, and the in-between. Is there anything else that they should be looking at from the homeowner side that you discussed with them at a first meeting?
Again, I'm going to bring up the service, the inline service, and I'm talking about where the city wall drainage system meets your property.
Okay.
There is an endorsement on our policy as well that in the event that something was to happen to that inline service, that we would cover it, meaning that there's no tree stumps inside of it growing or roots,
Right.
or that it cracked at one time 10 years ago. If this is fairly new housing and something happened to it, there's a potential that we can cover that claim for that line that's coming in and out of your house. So if it was there, that's another endorsement on the policy. It's like $25, $30 as well for the year.
Okay.
That's a great product. When you're spending your money and you're going to be investing in something as big as this, because you're going to be living there for the next, I anticipated my first home to be my stepping stone, and I'm still there.
Right.
You know,
Right.
so it's over 21 years. So I just imagine some people stay for 30 years plus or more. You know, so this is your largest investment. Take care of your largest investment. If you have any questions whatsoever and you have a good rapport with your insurance agent, ask them. They'll tell you. You know, they'll fill you in as much as they can. Most of the time, I want what's best for you. You know, and I can give you all the insight that I can, but it's up to you to make those decisions. Now, if you took an 80% policy and you wanted to save the $50, and unfortunately a fire happens later on, the company, any company would be happy to give you a $200,000 check on a $500,000 property.
Right, right. So you've just kind of shorted yourself by probably not making a great decision up front.
Right.
Right. Well, the overall explanations that you've given today have been really informative, and it's nice to know that we have someone close by right here with your office at 7134 Grand Avenue, and we're going to be sharing this information, of course, with our agent base so that they can become become much more knowledgeable on the insurance side of the business and know the proper questions to ask, and that the most important thing is that they're going to get, when those questions are asked, the information over to a knowledgeable insurance individual that can be able to provide them and their clients with the best answers and the best protections. Mm-hmm. So again, Charlie, today, very happy that you were able to join us at All Pro TV, and we hope to do this again in the future.
Absolutely. Thank you so much for
All right.
inviting me. I
Great.
appreciate it.
Okay, thanks,
Great
Charlie.
insight.
All right.
Thank you.
Bye-bye.